Hello everybody, it's me the Boss Hog and Happy New Year. I am recording this at 2 a.m. on New Year's Day, so we'll see how this goes. I have had some drink, but I can't seem to sleep and I've already readied my information. So let's do this. My stock portfolio as of the end of December 2021, which currently stands just over 106k. Let's do it. Alright, so cheers everyone. As well as a very enjoyable whiskey, it was a very enjoyable month. My best month to date, both in terms of value and percentage. Although I'm not quite all-time highs, which was in the middle of November, in terms of month end, I clawed back all the damage that happened in November, which was quite brutal for me. I am definitely overexposed to recovery stocks, travel stocks, leisure stocks, etc. So I am having some variance as a result of that. All things said, though, it was a pretty solid month without too much variance. I also had a holiday, so maybe it was just fortunate that I didn't see any, toward the beginning and middle of December. But yeah, I also outperformed the indexes, which did have solid ends to the year. The Santa rally did eventually arrive, but 6k profit, no dividends this month actually. Was a bit sad. But wasn't too sad just because we made £6 grand profit. That feels really good. Fairly little in terms of additional capital. A couple of reasons for that. I was running ahead anyway. I'd already agreed with my wife that I was going to run ahead and then pull back in late December. We also then had a fairly expensive holiday. My wife and I are going to try and be a bit more disciplined next year, so we basically treated the holiday as a bit of a blowout. It was good fun though, but it definitely taxed our cash reserves a little bit. In terms of the table there, you can see everything hopefully matches. Profit just over 15k. Dividend 2.2, and then the rest is sort of a combination of realized and unrealized, which is still red actually. In terms of the unrealized, that's mainly just because of a couple of positions that are four-figured reds that we'll get to very shortly. Anyway, that's the overall summary. You can see it's all moving in the right direction. Like I say, December, super good month. And yeah, let's have a look at the detail now. All right, I am having water between cuts, so that's helping. But this slide looks a little bit different. That's mainly because I didn't have too much to say, so I've thrown in a couple of graphs. An extra graph. That's the bottom left graph here, which is by month my total portfolio worth. So this is showing both capital contributions as well as any profit. You'll see the big jump at the beginning there was December 2020. Yes, and that's really when it became obvious to my wife and I that she was going back to work after having maternity leave, and that she had a job to go back to because her company got bought out by a much larger company, and that wasn't necessarily always clear that was going to happen. Once that happened, we had a lot of cash that we'd built up, and so we basically put like 40 grand in immediately. Since then, it's been a lot more gradual. And yeah, you can kind of see. So this is the journey that's been on, and I've just picked a couple of numbers along the way there, so that feels pretty good. So every one of those dots is basically a month. You can also see their top left graph. So I started to do this. This graph's been in for ages, and yeah, you can see it's been an interesting 2 months there. The really steep drop, and you can see from that, right? I'm not back at all-time highs yet, but we are recovering. It's also pretty interesting in terms of the UK and US breakdown. Like my UK stocks have definitely found a footing. That's really been helped by my largest holding, which is National Express Coach Company, which has been showing some good direction. And even some of my other UK stocks like Games Workshop and Gamma that have maybe been a bit beaten up are showing some recovery. So a lot of my UK stocks, which are either leisure or travel, likewise as well, by the way, Hollywood Bowl, which at one stage was my largest holding, has also had a pretty good trading update in December. And again, it's moving in the right direction. So the light blue line there, which did momentarily drop into a negative in November, has definitely shown some progress. US has been a bit more mixed. I have my more speculative position in Genius Sports, which hasn't been helping that, and also FX movement's been a bit ugly, so that's definitely so my US profit isn't at an all-time high, and that's kind of the delta there. In terms of my index comparison there in the top right, which is the graph I've been doing for just a few months, it was pretty good this month. I still am, moderately behind the S&P 500, but made progress, outperformed both the indexes this month, so that felt really good, and you can kind of see it there on the graph. So it was actually pretty close for most of the month, again, that I was monitoring when I wasn't on holiday, but a combination of Genius having a bit of a bounce toward the end, likewise with Gamma, BMY also had a pretty good month, which is my second largest holding, and like I say, National Express, they have agreed to buy a very large bus company. Have agreed to dispose of one of their coach businesses to get past the regulators, which I think is sensible and probably necessary. There is some overlap there that they'll have to get rid of, but broadly speaking, it's a fair, if not spectacular, price that they've got for Stagecoach, and largely from an infrastructure perspective is really what they're paying for. So that feels pretty good. So some pleasing graphs from various perspectives. The bottom left is basically time and kind of commitment to the stocks and shares. Profit there is interesting, and that goes back to day one basically. So it's been interesting to see the direction there. And then the time weighted, which I introduced just because I'm adding so much capital, it's a much better comparison for me to be able to do. And yeah, we're looking to beat the indexes. This is my sort of 3-year target, and so far, again, I remain reasonably happy with how I'm doing. In terms of notable buys, which is normally what I talk about for the rest of this for these graphs, just the two this month really. So Merck, where I'm sort of tweaking my split between BMY and Merck. I spoke about it a couple of weeks ago, but basically I think they're very complementary businesses in terms of what they do, patent cliffs, and basically, I wanted to have that slight diversification in a sector that I'm not fully comfortable with, and that I think does have some risk. But I still think BMY is quite underpriced, and actually I think Merck as well has a lot of upside, so that seemed like a good pivot for me. And EPD, I also bought some shares as well, and sold out of Evraz, which is my main iron ore play that I've owned 3 times now. Made some good money on, but I saw EPD under $21, and to me, that's like an 8.7% yield and pretty easy decision for me. So I locked up some Evraz profits, or 6% profit, and then averaged down a little bit more on EPD. And now I've got 555 shares in EPD, which will be really good when they pay their next quarterly dividend. So that, yeah, all good basically. Nothing else to say here, so let's move on. Alright, so there is actually quite a big change here, but you have to look quite closely. So I'm not going to make you play like spot the difference with last month, because I'm assuming people have got better things to do. But the real difference here is the number of holdings, which last month was 20 and this month is 36. Now, a lot of this is really like very small new positions, or re-entering old positions that previously sold out of. The main reason for this is just to kind of start building stakes in those companies very slowly. A lot of them are kind of smaller. One of them has a market cap of about 60 million. Several of them have market caps of like a couple of 100 million. So it's just very slow averaging in. And also I wanted to monitor them in a bit more detail, probably do a bit more detailed due diligence rather than, cursory check before I bought like one share. But it's also my plan basically is to rebalance from some of my larger positions. You'll see shortly that, my 2 largest holdings are still 40% of my portfolio, but now I have a very long tail, and actually I have plans of how I'm going to kind of sell down those large holdings, get them sort of closer to 10% at the most. And then kind of go from there. So there's lots of new companies, but actually very little difference in the pie. The main difference is actually the transportation slice, but that's really just because of National Express and where they've been having a solid month effectively. All the rest isn't particularly changed, and although I did do some sells and buys, a lot of it was kind of intra segment. So I was like tweaking Games Workshop and buying Disney, or I was selling BMY and buying Merck. So it didn't actually make any difference to the slice ultimately. I was just like moving money around. So fairly little movement in terms of the graph here, but what is telling is that I significantly increased my positions, and as we'll see in a second, I have a very top-heavy portfolio currently, which is kind of the reason for the thumbnail, and because I've been having fun with thumbnails recently, so that's I thought that would make people's eyebrows raise a little bit. And it's a new year, so you've got to have some fun. Anyway, let's move on to dividends. Alright, so it's kind of difficult to say much here because there was no dividends this month. So what I can say is that it wasn't deliberate. Basically I've been selling out some of my dividend positions. I haven't, got into that kind of regular dividend growth thing yet. So, my graph throughout the year even looks a bit weird. March, I had a very large special dividend from Tesco. And then, although you can see some growth there, I've been sort of more of a value investor rather than growth. So, where I feel like I found opportunities, sometimes I was right, sometimes I was wrong. But, I've been like confident enough to back myself, especially after, I made a couple of good moves earlier in the year. That's kind of given me confidence to make those kind of plays. What seems to have happened as well is that I was checking when my dividends are actually due to come in, and my two largest dividend positions are BMY and EPD. Well, they both pay in February, so that kind of quarterly cycle is going to be very weighted by those two companies that account for about 50% of my expected dividend as things currently stand. So significant weighting is going to be there. So next year, assuming I don't make any huge changes to those stocks, and like I said, I will be selling down BMY, but probably only buy another 50 shares at most. I've got 300 at the moment. I realistically don't expect to sell any EPD at all. That's a real stable, like a nice stable reliable stock, and I still think actually it's undervalued from a capital appreciation perspective. But even if it's not, again, an 8.5+% yield is enough for me to be happy. So those two companies, along with my insurers, which I've got like an almost 11% holding in, are really kind of the underpinning of my stability in my portfolio, as well as either good yields and or some capital growth opportunities. So like I say, literally nothing more to talk about here, so let's have a look at my specific holdings in a bit more detail now. All right, so again, a reminder for anybody who's new, the method here is that it shows realized and unrealized positions on any active positions that I have, which is why, if you look at the bottom there with Evraz, I've literally got one share in Evraz, but again, I've been trading this almost from day one. It was the second stock I ever bought, so I made good money on it. So that's why there, right? And you can see here Apple, Microsoft as well. I was actually kind of surprised when I realized how much money I'd actually made from Apple. That was a bit of a surprise to me. But I could have made a lot more, right, if I was still in there at 180 or whatever it's at now. But in my slight defense, I think I actually sold them to buy Huntsman Corporation, which were my most profitable play last year. So what can you do? I will apologise for the format. Normally the minuses will be in red, so this will be a little bit easier to read. I just forgot to format, and then I'd close down the file without saving it and couldn't be bothered to redo it. So whatever. I do have 8 positions in minus, although only 4 of them matter, and you can see it's very top heavy here with Gamma and Genie. Gamma I've spoken about before. I think it's a real quality company. I've actually done a very long video on them. My main problem here, and the reason why I'm sitting on that 1.6k unrealized loss, just because I wasn't patient basically, and I was very excited to be buying it at 18, 19 quid, because I think the stock is worth about 24. And again, I'm very comfortable because I work in that industry, so fine. Genius as well, I also wasn't patient enough with. I felt like I've actually done a reasonable amount of due diligence on this company. I do appreciate it's relatively speculative, but to me, I like the direction it's moving in, and I think the share price has been really overly punished. I can't believe what the share price is, basically. Yeah, I think it's one of these that I would like to add to my position, and we'll see. I think both of them really I'd like to add to the position and just average down, just because, again, they're a bit sore thumb. Polymetal, I'm in less of a rush to average down. This is my gold hedge, and, obviously at the moment the market's relatively friendly, so the fact I'm down with Poly is no issue for me. And Dark, probably my own fault, really, but, I wanted a holding in that cybersecurity sphere. Maybe I didn't do enough due diligence. I probably didn't. It's not, a sector I'm particularly comfortable with. And now basically my approach here is I'm just going to sit. I'm basically bag holding. I'm down 50%, and I'm just going to see what happens. I've actually decided not to average down on Dark. I'm going to wait until their next update just to see whether they're able to scale in the way that you'd expect. But they're actually still loss making, which for me is a little bit concerning. I probably should have realized that before I put 600 quid on it, because, that's starting to become real money. And it's like I say, it's my mistake for, I don't always do a ton of due diligence before I open up very small positions, and I think that's okay. For me at least, I'm okay to put 20 quid on with very 5-minute research, but I did 15 minutes on Dark and then put 600 quid on it, and obviously that wasn't sufficient, and I kind of regret it, to be honest, but hopefully it'll turn itself around and we'll all be very happy. I've spoken about this a little bit already regarding trimming my larger position. So National Express, I actually have a plan to sell 20% in 4 tranches between 270, 280, 290 and 300. Already got it programmed on my broker, and what that should mean is at the moment my position is worth about 26k. Once I trim 20%, assuming it's then at 300 pence, I'll have 8,000 shares at 3 quid each. So then I'll have 24,000. So you'll see there I still have a very large position in National Express. And again here, my plan is just to unwind that very slowly. I think National Express is probably worth about 330, something like that. So that's kind of my target price. And once it settles around there, I'll see how we do, what the dividend is, what the kind of long-term direction is for the company. I still imagine that this will be a large holding for me for another few years as a minimum, maybe not forever. It's going to depend like how they transition to EV coaches, how they scale. They have a kind of land and expand, right? That's their kind of mantra in their management deck. I quite like it, so they get access to a city, say bus, and then they start advising on wider metro networks, all kinds of support services and that kind of stuff as well. So that's pretty cool. And likewise with BNY, probably less extreme here because I still like BNY, but my plan here will just be to add a little bit probably to Gamma and a little bit also to Merck, but again retain a fairly large holding in BNY. I really liked its management presentation. Obviously it's like huge, it's like 150 pages, and a lot of it's to like medical research and stuff, which I don't get, but I did have a quick scan through, and was looking at some of the data and the pretty graphs, which I kind of do just about get. And the bits that I do understand looked really promising, and they definitely have a huge pipeline, but obviously some patent cliffs that make people a bit nervous about the price. But management are very confident that, as stuff expires, they're going to have the revenue to replace it. So giving them the benefit of the doubt. Obviously a very chunky buyback and dividend increase as well on BNY. So I like those holdings, and that's fine. Anything else here I want to talk about that I haven't already? Yeah, Hollywood Bowl. I do want to talk about them actually. So in December, Hollywood Bowl released their financial statement, and they somehow managed to scrape to a profit, which, considering their bowling alleys that were closed for half the year, is pretty remarkable. This is the second year in a row that they scraped to a profit. This is really impressive for me. They gave some guidance in October that wasn't particularly clear, and at the time I sort of said, reading between the lines, I'm expecting like a sort of £0 to £5 million loss. So it was a pleasant upside for me because basically everything else was in line with expectation. 30 million in cash, another 30 million in debt facility. This is only a 350 million market cap, so some of these numbers are pretty small for obvious reasons. They're opening new centers. They've put in place all of the right stuff from COVID rounds 1 and 2, so they're reasonably well equipped. And I actually think that it kind of made me, like previously I said, I think the fair value here is like 270. Kind of made me add maybe another 5%, so that may be like 280, 285, because if it's able to kind of make this profit when it's closed for half the time, I think it's actually a very strong business that's going to start throwing off cash once it's actually able to operate properly. So going with that. Games Workshop, I think I've spoken about them enough, but they did release some results also in December. The market originally reacted really poorly, not really sure why. It recovered super quickly, and now I'm nice and green on Games Workshop. Again, here I think there's a 20% upside. I get people's worries about community engagement and 3D printing, but for me it's a very good business. Similar with Walt Disney, by the way. I think we're all familiar with the concerns around that. I was a bit surprised to see this is almost 5% of my portfolio, but fine. Phoenix, I really need to do a video on. They're maybe a difficult to get your head around life assurance company, but I think there's a really strong business starting to emerge here. They're now a mainstay of the FTSE 100, even though most people have never heard of them, and yeah, we go from there. Anything else I want to talk about very quickly? S4 Capital I've spoken about, managed to get them up to 0.5% of my portfolio, which was a target of mine, so that felt pretty good. And I think everything else here is just going to be a case of building stakes in smallish stocks that I'll talk about a bit more in the future once I have more materials waiting in them. So you can see here, once we get past probably WH Smith there, it's a very long tail of a very small weighting in my portfolio, but that's going to be a focus for me, that as I sort of add a little bit more money between now and March, and it won't be a huge amount because the ISAs are already full up and we're pretty maxed out from our cash perspective, but as we do start adding cash and or selling down those larger top heavy holdings, these are the kind of companies that I think I'm going to be building stakes in, basically. So that's the plan. Anyway, I managed to still make this last 20 minutes. I'm sure I could have been more efficient if I hadn't had brandy and Prosecco this evening, but there you go. Hopefully it's been very interesting. For me personally, it was a nice finish to the year. Hopefully everyone else had a nice finish to the year, and hopefully next year we'll have another pretty solid year in the market. So again, thank you very much, everyone. I've been the Boss Hog. Happy New Year, and good luck with your investing. Bye for now.